Imagine your bank account being drained in seconds or a massive fraudulent transaction going unnoticed, all because traditional fraud detection systems couldn't keep up. Financial fraud is on the rise, and criminals are getting smarter. But there's something even smarter: artificial intelligence. It's not just catching fraud, it's predicting and stopping it before it happens. Ready to see how this game-changing technology is reshaping the finance industry? Let's find out. Welcome to our deep dive into the world of AI in financial fraud detection. As cybercriminals become more sophisticated, financial institutions are turning to AI for an extra layer of security. In today's video, we'll explore how AI-powered systems are revolutionizing fraud detection by spotting unusual patterns, predicting potential risks, and preventing massive financial losses in real time. Whether you're a business owner, a finance professional, or just someone who wants to protect their money, stick around to see how AI is changing the game. Number 1. Real-time fraud detection. AI can process large amounts of data in real time, identifying unusual patterns or anomalies that may indicate fraudulent activity. Traditional fraud detection methods often rely on manual checks or predefined rules, which can miss more sophisticated or evolving forms of fraud. AI-powered systems, however, continuously learn and adapt, improving their accuracy over time. Use of machine learning. Algorithms can be trained on historical transaction data to learn the typical behavior of users. When deviations from this normal behavior occur, the system can flag these as potential fraud cases. For example, sudden large withdrawals or purchases in unusual locations can be flagged for review. Deep learning models. These can analyze complex, unstructured data like images, audio, and text, which are increasingly important in today's financial world. This helps detect identity theft, phishing attempts, or document forgery. Number 2. Behavioral analytics. AI is excellent at tracking and analyzing user behavior to create a profile of normal activity for each individual. Any sudden changes or suspicious behaviors, such as logging in from a new device or making unusual purchases, can trigger alerts for possible fraud. User profiling. AI models develop detailed profiles of customers based on their spending habits, preferred locations, and transaction patterns. If an outlier occurs, such as a high-ticket purchase in a foreign country, the system can identify it as a potential threat. Anomaly detection. AI can detect anomalies in real time, allowing financial institutions to act swiftly before the damage is done. This is particularly useful in credit card fraud, where fraudulent transactions can occur rapidly after a breach. Number 3. Natural language processing, NLP, in fraud detection. Natural language processing, NLP, enables AI systems to read, understand, and interpret human language, which is useful for detecting fraud in communication-based fraud schemes, such as phishing emails or fake documentation. Document verification. NLP algorithms can automatically verify the authenticity of documents, such as loan applications or insurance claims, by cross-referencing with existing data or detecting inconsistencies in language. Email scams and phishing. AI can analyze email communication and flag suspicious content or phishing attempts by identifying unusual requests, such as asking for personal information or financial details. Number 4. Predictive analytics. AI-based predictive analytics can forecast potential fraud risks before they occur. By analyzing large datasets and identifying trends, AI can help institutions predict the likelihood of future fraud based on current behaviors or emerging patterns. Fraud scoring. Every transaction or action taken by a customer can be given a fraud risk score, determined by AI. This score helps companies decide when to take action, such as blocking a transaction or flagging it for manual review. Early fraud detection. AI's ability to predict fraud before it happens reduces financial loss and protects customers' assets. Banks and insurance companies can prevent the payout of false claims by analyzing the risk patterns associated with particular behaviors or profiles. Number 5. AI-powered risk management systems. AI systems can analyze a vast number of factors simultaneously to assess risk more holistically. These systems can identify vulnerabilities in financial systems, improving fraud detection and prevention processes. Dynamic risk models. Traditional static risk models are often limited in their scope. AI models can dynamically adjust risk parameters based on real-time data, making them more resilient to new fraud strategies. Comprehensive analysis. AI can take into account not only financial data but also external data like market trends, social media activity, and public records, creating a more comprehensive picture of potential fraud. Number 6. Automation of fraud detection processes. AI allows for the automation of many fraud detection tasks that were once manual, such as transaction monitoring and investigation. Automated alerts. AI can automatically flag transactions for review, reducing the workload for human investigators. This also speeds up the detection and prevention of fraud. Reduced false positives. Traditional fraud detection systems can often generate false positives, flagging legitimate transactions as fraudulent. AI's advanced learning capabilities help reduce these false positives, improving customer satisfaction while ensuring tighter security. Number 7. Collaboration with human investigators. While AI can automate and enhance many aspects of fraud detection, the importance of human oversight cannot be understated. AI systems can process vast amounts of data in real time, but human investigators still play a crucial role, especially in complex cases that require context, intuition, and judgment. The partnership between AI and human investigators allows for more robust fraud detection and resolution. Enhanced decision-making. AI can sift through millions of transactions, identifying potentially fraudulent ones and flagging them based on severity. However, not every flagged transaction is necessarily fraud. This is where human judgment comes into play. Investigators can review the AI-generated risk alerts, apply their experience and understanding of fraud, and make informed decisions on whether to take action. Case prioritization. AI can prioritize cases based on risk scores, directing human investigators to focus on the most suspicious or high-stakes transactions first. This ensures that limited resources are used more efficiently, focusing on high-risk cases that need immediate attention, while lower-risk cases can be managed through automated processes. Learning from each other. AI models improve over time by learning from human feedback. When investigators resolve cases, the data can be fed back into the AI system, helping it refine its future fraud detection capabilities. Similarly, AI can offer insights and trends that might not be immediately obvious to human investigators, leading to more accurate decisions in the long run. Number 8. AI in blockchain and cryptocurrency fraud detection. With the rapid rise of blockchain technology and cryptocurrencies, new forms of fraud have emerged that traditional detection methods struggle to address. AI has become a powerful tool in tracking and combating fraudulent activities in decentralized networks like blockchain, where transactions are anonymous and often difficult to trace. Monitoring blockchain transactions. AI can be used to track and analyze blockchain transactions for suspicious activity. For instance, it can detect patterns in cryptocurrency transactions that might indicate wash trading, where an asset is traded back and forth to inflate its value artificially, money laundering, or market manipulation. AI's ability to monitor transactions in real time is essential for the fast-paced nature of blockchain. Number 9. Adaptive fraud models. Fraud strategies evolve rapidly, and AI models are capable of adapting to these changes much more quickly than traditional systems. With machine learning, AI can continuously improve its understanding of new fraud tactics, making it harder for fraudsters to stay ahead. Real-time learning. AI can learn from new data as it's received, adapting fraud detection models to account for new techniques that criminals may try to use. Self-updating models. Unlike rule-based systems that need constant manual updating, AI systems update themselves based on real-time data, ensuring they remain effective as fraud tactics evolve. Number 10. Cost efficiency. By automating fraud detection processes and reducing the number of false positives, AI helps financial institutions save significant costs related to fraud investigation and prevention. Additionally, early detection of fraud minimizes the financial loss incurred from fraudulent activities. Reduced operational costs. AI-driven fraud detection reduces the need for large fraud prevention teams, as much of the work can be automated. Minimizing losses. Catching fraud early means fewer losses for financial institutions, insurers, and their clients. This is crucial in protecting profit margins and ensuring the overall integrity of financial systems. AI is transforming fraud detection in finance by offering more accurate, real-time, and adaptive methods to combat financial crimes. By leveraging technologies like machine learning, natural language processing, and predictive analytics, financial institutions can stay ahead of fraudsters while minimizing costs and enhancing security. The dynamic nature of AI ensures that fraud detection models continuously improve, safeguarding the financial industry from increasingly sophisticated fraud attempts.